He's muted.
Hey, man.
Hello.
Yeah, I'm gonna drop because I gotta cook dinner, but I saw your email.
Thanks. How's the angle?
What's that?
Said, how's the angle?
Yeah, so that's gonna be your microphone too.
Yeah, wait, this is a microphone.
Yeah, that's where the sound.
God.
So you have to
Yeah, we're just trying to set it up right now. I just put the email out to everyone on my database to see if people would join.
Yeah, there was no like date or time on it, so I wasn't sure when it was. I don't know if that was.
Did it say starting at 5?
No.
What?
Here, I'll take a
Should've.
screenshot. I'll take a screenshot and show you.
All right, yeah, just text it to me. Yeah, you don't have to stay on. Just text it to me.
Have fun.
Thanks.
How do you want you want them out? Or do you want them to-
That's fine. See what anyone thinks.
Yeah, I want to see.
I mean, I think that's fine how that is.
Yeah, but you have to talk kind of loud because if people are on me.
It's fine.
All right.
Where is Angelo? Maybe he's the one ditching me. I'm gonna mute and turn the All right, so we're gonna be, when you get up and speak, you're gonna have to, I would say probably switch with me because now that I attach this camera here, that's the microphone too.
Okay, cool.
So it might not pick it up.
The PowerPoint anyway.
Yep, might not pick it up if you're all the way over there. But we'll just go ahead and get started. So my name is Brant Mikolas. I work with KW here and the Dave Marcola Group. We've been consistently one of the top producing teams here, platinum producing team. I've been with Dave for, geez, I don't even know. I want to say like maybe a little under a year. And he's been great to learn from. He's a very positive person in the office and has taught me a lot. He's a great mentor to have, and I'm just trying to get up and do the same type of things. Angela here is one of our trusted lenders. He's a great guy as well. Sean, if you want to introduce yourself, go for it.
I'm Sean. I'm on the Justin Gall group here. I've been here for a little over a year now. And yeah, I'm just here to support Brent.
Yeah, and Sean's
Some of
crushing it.
I've been doing these too, so I kind of want to see. how
Yeah,
he's
he
doing
and
this.
like I said, some of this content that you're gonna see is Sean. So we've been helping each other out. Sean's a really good dude. He's been killing it. And that's what we were talking about before. It's really just connections, relationships. It's an abundance mindset instead of the scarcity type of mindset where, oh my God, I need to keep everything close to the chest. It's all mine. But yeah, we can go ahead and get started. So Angelo will talk a little bit more himself when his slides come up, but for now we'll just go through like the super basics. So for me, it's going to be like nice, short and sweet. If I can get this to move. There we go. He's going to do like a bit more in depth as far as numbers and things like that. 'Cause that's going to be his expertise. Like I know enough, but I'm not going to sit here and talk about market statistics to an extent to where I'm going to say things I don't know, or it's my job is more on the agent side where I'm going to kind of connect you with the right people such as Angelo. I'm going to be the one finding the properties for you. I'm going to be the one who knows the home values, negotiating for you, those types of things, contracts. That's more my deal instead of the financial like stuff. So I mean, basically, you said that you've never bought a home before, right? So this would be really fresh for you.
Yeah.
It's pretty simple. There's honestly not much that goes into it. I think it scares a lot of people away more than anything. People think it might be harder than it actually is. That's what we're here for too, because like I said, we're going to provide value and make it as simple and smooth as possible. So as you see here, the most basic things, this is how it works. So you're going to select an agent, hopefully me. And then these two, you can kind of get away with, like me, you might be able to do sometimes I would do the console first because we might want to see where you're at, get a basic idea so I can pick, okay, which lender we're going to go to, things like that. It helps us get a little bit better idea of where you're at and how we can best help you. So, I mean, it'd be nice if ultimately before the consult, we had the pre-approval ready to go, because that way when we sit down and start selecting properties, we know where your range is at.
Right.
But those things can kind of be flipped. Like it might be consult comes first, then pre-approval, but those things kind of go hand in hand. So
I already got some of those done hard. Like I got a pre-approval just to see what I was curious, like what could I afford?
Okay.
What kind of rate? Yeah. So I
Good,
went out and
good.
got some of that.
yeah, so typical, like I said, I'll go in depth on each one of these things after, but this is so after the consult, that's basically just you and me meet. Whoever's going to be buying to is going to meet with us. Any decision maker is going to be there. We're going to go over all the basics of home buying. And then after that is going to be coming to selecting properties. And that'll be, so part of the consult is, I'll get on the next slide, but it's going to be kind of coming up your criteria. That's where I go and make a search. And then you'll get the email searches from me. And that's when we go and start selecting properties. Once you have some ideas that you want to see, we'll go and start viewing them. After that, if you find one you like, hopefully we'll write an offer. This one kind of not really happening right now, negotiate terms. That's more of in a normal market right now. There's not much negotiating. It's kind of just put your highest and best and fingers crossed. So in a normal market, yeah, you'll probably negotiate terms before you get a written contract accepted. But right now we're not really seeing that a whole lot. And then we'll accept the contract, clear contingencies so the contingencies are inspection, appraisal, things like that. So once you're in contract, those will be the main things. We get the inspection, contingency, appraisal, and everything. Once that clears and you get the clear to close, we go to closing table, you sign your documents, and that day you get your key and you can move in. There's some states where you get put in like an escrow period after you sign and you have to wait a few days, but PA, you get your key as soon as you close. As long as everything is how it should be.
Right.
There's always, could always be something that could stitch that up, but. So the bio consultation, so the main, what's your motivation? Why are we moving? Where are we going? Like where and when is all gonna be coming back to like your big why. What's the motivation? Because that's gonna help me decide how I can help you. Like the more I know what your motivation is, the more I can assist in helping you meet those goals and motivation. So as we get as much info as we can, and this is basic questions, like I said, just where are we going? When, that's probably the most important thing right now, because like I said, the market is a little tough. So knowing the deadline might be the best thing, so we know, okay, we need to get moving now. And then, like I said, so the buyer's consultation, we're going to want any decision makers there, anyone who's going to be part of the decision-making process, we want to be there to consult, because we need their info as well to know, like, they're going to answer these same types of questions. So anybody who's going to be, they don't necessarily have to be the ones that's going to be on the mortgage or the deed for the consult, but anybody who's making a decision with you needs to be there for the consult. Just helps, it makes our job a lot easier. What are your needs as far as what kind of are you looking for in a house? What do you, basically, I have like sheets too. It's like a checklist, like buyer wants and needs. It gauges like a pool, is that a want? Is it a need? Is it a don't really care? We really want to find the needs first, because in this market, you might not be able to be as picky as you
Right.
want to be with what you're first getting. And that goes into what are your expectations, like what are you expecting to get out of this? What do you expect on my end too? Because that's most important. Because if I don't know what you're expecting out of me and I just kind of do my thing, and then at the end of the day, like, oh, I didn't like that, I didn't like that. You want to be clear, is like, what can I do to best assist you? What are the expectations? So I can meet those. And then the most common question I feel like is who pays the commission? And typically that's going to be how it works is there's a split when the listing agent negotiates sell price with the seller and everything. They negotiate like the commission price, and it's typically anywhere from 5 to 6%. And then the most common for buyers is 2.5% on my side. So the seller is the one that's paying that. The listing agent splits their commission typically evenly, but so in pretty much all cases, unless we go to like a FSBO or something where they're not offering commission in the buyer's contract that you signed, if you can be held liable to pay that commission if for whatever reason it doesn't happen. But 9 times out of 10, that comes out of the seller's pocket is the one who's paying the commission. So working with a buyer's agent is basically free. The next thing too is how we search for the home. So once we have an idea of what you're looking for, that's when we go into the super fine details of our, we're going to plug this into what we call the MLS, the multiple listing service. That's what we're subscribed to. Well, you guys don't have access to that, right? Loan, you guys don't.
I do, but not directly.
Yeah. Okay. So for me and Sean, like we can't really do our job until we're subscribed to this. And technically, I don't even think we're considered realtors until we're subscribed to this. Like, and there's other things we have to be subscribed to, but this is basically our main thing that we work off of. And that's going to pull all the info, what's for sale, what's coming soon. So that's the other thing too, that when we're the only ones that have access to this. The public can't gain access to this unless we send you something, but you can't go in and like search for stuff and stuff like that.
Can I just say,
Yeah.
working in this market, you need to have a buyer's agent.
For sure. Yeah. Cause we can,
Work with someone who you know and trust.
yeah,
They're gonna get you right now. 'Cause
for sure.
How competitive the market is right now. You need to be in a contract with a buyer's agent.
For sure, that we're going to protect you. I think a misconception that a lot of people think is like, oh, I'm going to get a deal if I go get double pop with the listing agent. But I mean, yes and no. I mean, yeah, you might have it, but it's a fine line, because the listing agent, they're contracted with the seller. They don't protect you. Their job is to provide the best they can for the seller. So if you are working with them, people might think they're getting a deal, but really they have the seller's best interest in mind, not yours.
Right.
So that's where the
Agreed.
buyer's agent comes in, where we are contracted with just you. So we're going to do what's best for you, and not, I mean, obviously in the perfect world, win-win, that's what we want. We want both people to win the deal, but you're protected under us, not under the listing agent. But, and the same thing with the MLS, that we're the only ones that have access to it, so we can see what's called coming soon. So marketing strategy for a lot of listing agents. I actually just did this on my listing that I got yesterday. It's coming soon today. It just gets puts out to all the agents that they can see it and say, okay, it's coming soon. Typically it's just one picture of the front of the house with just the info. Gets put at coming soon. Agents know about it. They can tell their clients, you can get prepared for when it's coming live. And that's not something that'll go on like websites like Zillow or anything like that. And that doesn't go public. So only agents can see that and let their clients know.
Okay.
Once it goes live, that's when you see it on Zillow and stuff like that. But you won't see anything coming soon or anything off market or anything like that outside of the MLS service. And the other thing too, we can get off market deals. If there's a specific neighborhood that you're looking for, we can call around. We try to get listings for you. We'll try to just get you a deal that doesn't even go on this service.
Right.
So yeah, that's the basic thing. It's called an auto search is what I typically do for the MLS. We plug in all your criteria and it just sends you, I see usually for my clients, I usually set it up like Monday, Wednesday, and Friday mornings. So every Monday, Wednesday, and Friday morning, if there's something new in your criteria, it's in your email box, you see it. And then once you see something you like, you reach out to me, we set up a tour. I'll go through like what your schedule is, what my schedule is, what can we get in? And if I can't get you in and it's this market, you need to be urgent because things are going quick. So if I can't get in, I have people on my team that they can just do the showing for you and then we'll write the offer. But you'll never have to worry about missing an opportunity to go see a house. Unless for whatever reason, it's gone in like 2 hours, which it's happened.
It's happened
So
lately,
yeah, it's happened. So it's certainly possible, but then then we'll do the showing and that's just gonna be, I'm gonna show you the house. We're gonna go through it. You're gonna get a feel for the house. We're gonna check everything over to an extent, that's what the inspection's for, but just see if you like it. And then from that point is when we're gonna put an offer in. And the keys to the offer are gonna be what are you comfortable with price? We got to figure out a settlement date. When do you want to close? When do you want to move in? That's what comes back to the motivations, why, where, when, stuff like that. You're going to put a deposit in, an earnest deposit. So that's typically within 5 days of contract as the first deposit. You can break it up into two. And that's going to be, it's just showing you're serious. There's a deposit on the house. And if you fall out of contract without reason, like out of the contingencies, like inspection or appraisal, then you lose the deposit. So it's basically just, it's like a down payment on a car almost, but and that is included in closing costs. I get a question a lot too, like, oh, am I gonna have to pay? Like they see closing costs and then they see the deposit and like, oh, I have to pay extra. No, that just comes out of the closing costs. So say your closing cost is $20,000, you do a $10,000 deposit. The deposit comes out within the 5 days, but then at closing, then you only owe 10. It's not another 20 on top of that. Just comes out of closing costs. And then the contingencies, that are we doing an inspection? What are we doing with the appraisal? Those two basic things. And those are probably the most important things right now. And again, this is like, I'm trying to do it super basic because these are things that we'll go over really thoroughly once
Right.
we're putting an offer in. Like it's going to be a lot more in depth. Like there's an agreement of sale. We go through a lot of paperwork. That's things that we go over on the buyer's console, or make sure you know what you're signing and what you're looking at. Same thing when you put in an offer, we're going to go deep dive into it. This is just basics, like what to expect. Then some offer strategies we're seeing too to win in this market, because I'm sure you understand this market's a little tough. We've seen people offering to pay the seller side transfer tax. So there's transfer tax. I don't know what it is. It's different in Philly, like 1 point something, right? 2.8. It's a little higher, 2.139, but mostly around here it's 2%. Typically it gets split in half. It's up, Tom. Typically it's split in half. You pay 1%, seller pays 1%, but what we're seeing to make an offer a little stronger is you pay that extra 1% too, so you're paying the full 2%. It just takes away some closing costs on the seller side and makes it a little bit more of a stronger offer where you're just offering, okay, look, we're taking more expenses away from you. Which it can get pricey, like it just depends on where we're at financially, but it is one strategy we see where you just offer to pay the full 2%. And then when I mean tolerance for appraisal and inspections, it means like you're seeing everyone's like waiving inspections.
That's one reason why it's been so hard for me. I'm just not gonna do that, right?
Yeah, and for me on my side, I'll never tell my client to waive inspections. That's not something I'll ever
Every real estate
recommend.
person I've spoken to said, I would never tell you to do
Yeah, I mean, but it's tough because it's like
Yeah.
I personally, I don't think it's not something I would do,
that. Yeah,
but the facts are there that those are the offers that are winning.
yeah.
So, and there's ways around that too, like that, I'm not gonna go in deep now, but there's tons of different strategies and ways to get around it and things like that, but
Yeah.
for the sake of just trying to keep this short and not bore everybody, we're just doing the super basics, just
Yeah.
what to expect type of thing. And then tolerance for appraisal too, is like if you want to make up appraisal gap to say it doesn't appraise because you're going over. And I'm sure you'll talk about that too. There's a lot of strategies on the mortgage side too, to where you're not actually paying that much out of pocket, but you're showing it that you are. And then I say the two things for me, at least on how I've been able to get deals done for my clients, is being flexible in the closing, and if the seller needs it, offering lease back. Because most sellers aren't super greedy where they just want an absurd amount of money. Most of the time they have motivations too. They need certain periods where they need to be out of the house or they need the house. So if you can be a little more flexible and helping them with their goals as well, it makes it a little bit nicer, more of just going crazy over asking. So my strategy typically will be, and Sean does the same thing, because we in KW, we're all coached, and this is the thing we're taught the most, is always connect with the listing agent. Find out the seller's motivations. What can we do to make it the strongest offer possible without having to cut off our leg and give it to the seller? Like, and those seem to be, I don't know about you, Sean, but those seem to be the things that help a little bit more than just saying we'll pay thousands of dollars extra. And it depends. Some people they don't care. They just want money. But being flexible with the closing, lease back opportunities. A lot of times it's expensive because there's not much inventory too. A lot of people want to sell, but they're hesitant because they don't know where they're going to go. So a lot of sellers they want offers contingent on them finding a house. So if we can do like a quick close and then offer them like a 1 month lease back, where we say, okay, we'll give you your money quick so you can go buy that house that you need and you need the funds to go buy for. And then we'll give you that month to where it makes it a lot easier for them. And again, that just makes it a lot more enticing on a lot of sellers' eyes if they can do things like that. And then inspections, I'm not going to touch too much on this. I'm not a licensed home inspector. I know this is what is on the agreement of sale. These are all the different types of inspections that you can pick. Typically, the most ones that we see is home inspection, termite, radon, and the only time you really see water or sewers if it's well water, like septic, anything like that. Like no one's doing water or sewer inspections on public water or public sewer because you don't need to. They do that every day. Deed restrictions and zonings. I don't think I've ever done a deed restrictions and zoning inspection. These are just all the different ones. Like I said, I'm not going to go too into it because I'm not licensed in that. That's what we have the inspectors for. But the most common ones are going to be your basic home inspection, your termite, and your radon. And then lead-based paint if it's built prior to 1978. Anything built in 1978 or after, they say doesn't have lead paint in it, so you don't have to disclose it, and you don't really need to test for it. But so that's pretty much it with inspections. And then closing day, basically it's easy. That's the most fun part. So closing day happens. We typically will schedule a walkthrough for the day of, like the morning before you go to settlement, to sign everything, and that's just you're making sure that everything is as it was when the contract was executed. Everything that they say is going to stay there, like microwave, stuff like that, is working and is there. You're just making sure that everything's in working order. And there's a lot of stories you can hear of people going to walkthroughs and some crazy things happen. But I know Sean's got a couple, but typically you just walk in. What I normally do with my clients on walkthrough day is I go upstairs, I stop the bath, turn the bath on, see how quick it fills up, drain it, see if there's nothing dripping from the ceiling where the like above where the bath is, test your washer, your dryer, oven. You just test these things, lights, anything like that, anything that is different than what was there when you first looked at it, and what it's contracted to be, you can negotiate to have fixed or breach. But again, it's a little tough, but it's very rare you see like wild things like that. Usually it's pretty easy. You just walk in, test everything, we're good to go. And then we go to settlement, and that's where you'll sign all your documents. You'll pay the final dues and you get your keys and you can just go right back and move in. It's that simple. It's really easy. Most of this stuff, it can get in depth if you let me sit here and talk for like 4 hours, but That's the point of the consultation. And as the relationship grows, as we get further into the process, that's when more things will open up. That's when we'll talk about more things. But this is just super basic stuff. And then up next, yeah, that's all I got. I don't know, you want to do like questions now for me or just do it all at the end?
What would you like?
If you have any specific questions for me before we move on to Angela's
Is there any
side.
questions you have so far, Justin, that you're thinking about?
I wrote a couple, let me see if I have anything based on your topics here, so I wrote a couple things down here. I want to do this now.
Yeah, we'll definitely, once Angela's done, we'll definitely do like a full in-depth,
Yeah,
but if you have any now.
It'll give me time, I wrote some things down, just give me some time to fester here, and then we can ask them all.
Yeah, for sure. And we're here for all of
Thank
it. And
Yeah.
yeah, I was trying to be super basic, trying not to bore you too much.
Good job, Brent.
Most of it is not that detailed, so I could talk about it for a while, but it'd be kind of the same thing over and over and over again.
No, I got a good gist of things. Thank you.
But it's relatively simple.
All right. Okay. So I'm ready here, ready to go. All right. Well, thanks for coming, Nancy, Sean, Justin. So what I want to do is just quickly identify who we are, right? And then talk about a couple of different topics here. So first up, we're going to talk about when will the market come down, right? It's sort of there's some unnatural things that sometimes happen in real estate.
You tell me you know, I'll say I don't believe.
Great answer, right? So we're going to go into that, right? We're going to talk about rent payments versus mortgage payments and the actual way that you should assess rent compared to mortgage. Now, are you renting right now?
I am.
Okay, cool. We're going to talk about the process of getting pre-approved and why this is such an important part of the home buying process. We'll discuss briefly the pros and cons of using your local bank. And then, of course, actually, we're going to touch again on home inspections as well. And it connects with Brandt's thinking also. All right, so some obvious feelings, right? When you're looking to buy a house, you feel concerned. You feel stressed about it, intimidated. I frequently experience first-time home buyers feeling very intimidated because there's all this jargon, right? Moving around home buying, and you have all this input on the media and from your friends and family and coworkers and things like that. And the sale price is a tremendous amount of money compared to other things that we purchase, right? So frequently for buying a house for a first-time home buyer, all these thoughts can make it really concerning, right? You can feel anxious, uncertain, all those things. And the goal really of myself and my team, and for Brandt and his team, isn't to convince you to do anything or sell you on anything, right? If we were at the mall and you wanted to buy a sweatshirt from me, that would be a different process, right? Because then I'd have to convince you why you needed a sweatshirt, okay? But when you're buying a home, you more than likely already understand the incredible value of buying a home. We'll touch on some points that you might not even consider quite so much with buying a house, but you realize how valuable it is to own a home, not only for when you're using a house and the benefits it has on your quality of life and stability, but also because it has investment quality in the future. And we're seeing many people cashing in on the investment quality of their home. So the reason I describe that, of course, is because when you do look to purchase a house, it's all about preparation and education, right? You want to have confidence and clarity, and that's what we're going to go through. So for these next couple slides, I just want to give you some information with explanations so that you have greater understanding of the market and home buying in this market right now. It's kind of funny. There's an agent that popped by when we were getting set up before you came, and we were talking. He's been selling real estate for 20 years, right? I've been doing this for almost 20 years. Yeah. And we were talking about how like, it's constantly a moving target, right? Like buying a house 2 years ago is different from now. And 2 years ago, it was different from 2 years before that, and before then, and then, right? It's constantly shifting. So it's always important that you have the right knowledge. You don't get convinced to do something like buy a house, obviously. Our team is actually right down the road here. We're at the end of Terry Drive. We have our office right here. We live in Holland. Most of us on our team live right in Holland. And we focus on that consultative approach, right? We do very thorough pre-approvals, and we have that consultation so our clients have information. You're welcome to look us up, actually. You can see our reviews. I think we even have a couple more this week since that was posted. And all this stuff is echoing basically what I just mentioned, right? We guide our clients, we prepare them, we make sure that we don't miss the details, all right? So what are the steps to home ownership? And Brandt touched on this, but from the mortgage perspective, the one thing that's most important than everything else on here is to understand that the mortgage is the most complicated, complex part of the transaction. And it is constantly or it is the largest issue that could cause delays in the transaction or even potentially your transaction to not occur. Qualifying for a mortgage has a very specific set of guidelines. There's different guidelines depending on the loan that you're selecting, but there's very specific guidelines. So the devil's in the details. So to treat a mortgage pre-approval as an item to check off your list of tasks for the day could potentially put you in trouble, right? Because you can just quickly go online or on your phone, right? Even or call a bank sometimes. Certain lenders will just run your credit and they'll discuss your income and assets and be like, all right, Justin, Sean, you're in great shape. You can buy this house. Go find the house and then come to me when you find it, right? And then we'll get all your paperwork. Or they'll say like, oh, I need to get some paperwork from you, but you can get that to me in the future. Here's your pre-approval letter. That's one of the most dangerous things you can do, because the last thing you want to do in this process that naturally is stressful and anxietyful, right? Because of the step that you're taking, the last thing you ever want to do is find the right house and fall in love with that house and compete for that house and win that house and tell your friends and family that you're buying that house, and then have something fall through the cracks and not be able to get you around to buy the house, right? So that's why you want to make sure that you have a very complete, thorough pre-approval done up front, all right? Going hand in hand, as I mentioned, with the pre-approval is the consultation. Don't get pre-approved and have be like, all right, go find it, because you still haven't learned anything, right? You've only learned that you can get a loan. So what you want to do is then understand the market, the correlation between sale price and monthly payment, which is really important. It's again unnatural when you buy real estate, because it's one of the only things where the sale price doesn't really tell us the affordability of the home, right? You could have 10 houses that are all $300,000, and there's a very good chance that all 10 of those houses will have different monthly payments, right? Because there's taxes and insurance and potentially association dues included there. So it's total affordability you want to focus on. And that's going to be the right approach to position yourself. So let's talk about a couple of mistakes that people could make. And within these mistakes, of course, I'm going to give you some data, right, to understand the market. So mistake number one, waiting for the market to come down. Just as you said, you're like, yeah, if you could let me know when that'll happen, that would be great. So let's talk about the data. And again, it's natural to think what goes up must come down, right? In the last 2 years, we've all noticed property values in this area and many parts of the country have significantly increased, well above average, okay? So let's look at some factors as to why this is happening, right? So again, as I already mentioned, here's some recent headlines, right? Something big is changing in the housing market. Should you prepare for a housing market crash? Is the housing boom now a housing bubble? All this stuff, right? And we see different media outlets sometimes misconstruing data so that aligns with the point that they would like to make, not the actual point that they're seeing, okay? So here's something to consider as we start to review this. Single family rents post the largest year-over-year gain in more than 16 years. So the headline is real estate values, but what doesn't get so much coverage also is the incredible amount that rents have increased. When you compare monthly rent increases to real estate values, in many areas, monthly rents have increased at a higher percentage than values. So the reason that we mention this is because this is fueling demand in the real estate market. This is one of the many things that are. And the simplest way to understand the real estate market right now in this area and many parts of the country is the supply and demand curve. We have a time right now where we have significantly greater demand than we have supply of suitable homes to buy. And with any product that's being sold, you'll understand when there's way more demand than supply, it drives the price up, okay? So inventory right now. So here's this, there's a graph here, but the simple way to understand it is you see here in 2007, inventory was almost 4 million. You see here in Q1 of 2022, we have less than 1 million homes for sale, even less than 900,000 homes for sale. And this is nationally. So this is firm data that supports that we have a significant issue with inventory. And I've been seeing this in this area growing over the past 5 years. I've seen this challenge, and we've seen it in some of the seasonality of this market, where typically things would be a little bit quieter in the winter. I've seen some stronger winters with people buying and selling and things like that, and more competition and offers. It's been growing, and now in the last few years, it's really just evident to everybody this dynamic we have where there's well more demand than supply. So now home vacancies is something to consider also. And this just further supports the low inventory, right? Vacancies are very low, which obviously means that it's a supply issue, certainly. One other thing to think about, right? We said in 2007, before we did actually hit a housing bubble, there's about 4 million homes for sale in the country, right? And now in 2022, about 15 years later, we have less than 1 million. Has the population in this country increased or decreased since then, do you think? Yeah, there's about like 11 million more households in the country now than 15 years ago in 2007. And then there's some other factors that are compiling on this. Whoops, wrong button.
I think like this past year is the first year it didn't grow in like a long time. So,
Yeah, and it's interesting because there are some people who think that this is gonna like solve the issue, but I don't know when or how it would necessarily do it so quickly. So here we see here existing home inventory. This is just another way to illustrate the exact same point, right? Of how low the inventory is, but it just gives you a historical view of it. And actually, I wish we had this that went out even farther into the future because you can see we're really at lows that we've had. It's been many years since we've had inventory this low. So this is a good one. So new construction is frequently a way that you can help, maybe not completely solve our inventory issue, but certainly help our inventory issue. So when we compare before we went into the housing bubble, these were the greatest years for new construction that we've seen in our country. There was the most amount of houses were being built in this time. Since 2008, there's been a decline, and we've been performing under the average for 13 years now, essentially since the housing bubble in 2008. And then also we have to factor in that since COVID, there's labor issues and of course, supply chain issues. So when you look at the data on new construction projects being completed, it's taking longer, of course, for them to be completed. So it does not look as though new construction is coming in the near future to be able to shift this dynamic.
who knows when the supply chain will catch up? Could be 5 years till that even gets caught up.
And that's
Yeah.
just one component of it. Exactly.
You know?
Exactly right. So let's look at something else. So first-time home buyers are very important when you're assessing a market because first-time home buyers obviously add demand, but they do not add inventory, right? Because they're purchasing their first home, just like yourself. So when we look back in the mid 2000s, that was Generation X. And if you look compared to the other population, we had the baby boomers before then. It was a certainly lower amount of people in that age range in 2006, 2007. It was a much smaller proportion of the population. So now though, people in their mid 30s, are you even 30 yet?
Thank you for the comment. 37. I'll be 37 next month.
All right, cool. So you're right there in that pocket though, right? They say the average age is around 33, right? So you're right there in that average first-time home buyer. You may or may not consider yourself in the millennial generation. And essentially, they're similar to the baby boomers you can see as far as the amount of births and population proportion. That's a much larger portion of the population. If you also look to the future, it's kept going.
Yeah.
Right? So this means that we're going to have this steady influx of demand from first-time home buyers. That's going to be continuing well into the future. So these next two slides are going to illustrate a point. The first thing I want to show you is since 2008, of course, I'm sure Nancy can attest to this. There were loans given in the early 2000s and mid 2000s that shouldn't have been issued, right? The person with lower wages was given a loan to buy a $500,000 house, and the payment that they were sold on wasn't even the full interest payment that was due. And then next thing you know, it came time where they had to make the full payment with principal and all of the interest, right? And there's no way they could make that. And from making that payment that wasn't even the full amount of interest, their loan amount increased. And then we had the housing bubble hit and their value went way down and they were significantly upside down and couldn't afford the house. Those products are gone, right? By and large, there's different creative products that can be issued, but there's a heavy emphasis on the borrower's ability to repay and making sure that there is no abuse with the client in how the product is given to them. So obviously, look at all the red is risky loans right now. The market has tightened up. So it's not as if we're going to be headed for a significant slew of foreclosures, it necessarily looks like. And in connection with that, even if people did have changes in their life and we had a recession that affected people, the equity right now is really at its highest point it's ever been. And equity, of course, is the difference between what you owe on your home and what your home is worth. Okay, that difference is your equity. So if you owe $200,000 on a home that is worth $300,000, you have $100,000 in equity. You can see in the last year alone, the state of Pennsylvania on average gained almost $20,000 in equity. Right? So that's a significant amount in 1 year, obviously.
Right.
Now, and again, this does come in two parts: amortization, paying your loan down, and appreciation, your value going up. Most of these strong numbers obviously are from strong appreciation.
Year was before the pandemic, 'cause obviously it was crazy the last couple of years, right?
It wasn't as much as this. This is probably the strongest that it'll be, but it's certainly been
Yeah.
it's been good the past few years.
Yeah.
So, and the point of showing this in conjunction with the risky loans is we're not going to have, it doesn't appear from this data that we're going to have the type of situation where you have significant amount of foreclosures and it drives values down. Because if someone does face foreclosure, they're going to have a bunch of equity. They're not going to get foreclosed and they'll just sell the place, right? Much more frequently than they would at least in 2008 when we had that bubble and they had no equity or they had negative equity. And they're like, well, what choices do I have? Pay 50 grand to sell my house or just hand it over, you know? So these are all further, of course, points that are showing towards a pretty strong continued market. Net worth, this is just a quick mention here, right? A homeowner's net worth is 40 times greater than a renter's. And I'm going to show you a couple quick graphs that we're going to go through just to kind of illustrate some of the math behind that as well. All right. Mistake number 2. Rent payments and mortgage payments are the same. So frequently I talk to clients and they'll start, and I have an introductory conversation before they do the pre-approval, and I'll just ask them some basic things to learn about them. And one is always like, where would you like your monthly payment? What range would you like the monthly payment to be for the new house? And sometimes I have clients frequently where they say, well, I'm paying like $1,200 a month right now for rent. I was hoping like maybe keep it there or a little bit cheaper would be nice. All right. I'm like, okay. So we want to go through this so that you can actually assess your rent payment compared to your mortgage payment. Now you pay rent in Holland.
I do, yeah.
Do you mind
I'll
sharing?
provide a good example on that, because I got lucky with my landlord. She's like, I love you, so I'll never raise your rent. So I got lucky, got no increase during.
In 8 years, and you've been there for how
I've
long?
been there for 5 years. Yeah, 5 years now, no increase.
That's awesome. Where are you in Holland?
Village Shires.
Ah,
Beacon
nice.
Hill Drive.
Yeah. One of our processors actually lives in there. in Beacon Hill.
Okay, cool.
All right, so we want to make sure we're comparing apples to apples, not apples to oranges, of course, right? So if
I get
you're,
your point completely.
so the challenge here is when you compare today's rent to a mortgage payment. The reality is part of the reason you're looking for a home is because you're not necessarily content with the rent you have. Now, most people aren't in your situation where they have a landlord who says, I love you, you can live here for as long as you want and I'll never change
When I
it.
was a
Right?
landlord, they raised it every year, so I know what you're talking about.
Yeah, and that's typically what will happen. So essentially what will happen is your rent is either going to increase or you're going to go rent a different house that suits your needs, that you like better, right? So when we assess this, we want to make sure we're considering that too, because your mortgage is inflation proof, right? You have a fixed rate mortgage in most cases where the monthly payment for principal and interest never changes. So over time, everything else becomes more expensive, your wages go up, but that principal and interest payment stays the same. Okay, your taxes and insurance could increase. Of course, your taxes more than likely will, but that's a very small portion of your payment compared to your rent increasing. The other thing to consider also is that when you make that mortgage payment, there is a part, there's principal and interest, as I mentioned, that principal part goes to you. That goes towards your equity. So when you make a monthly mortgage payment of $600 goes towards principal, that's an extra $600 of your equity that you've just earned. So when we consider this, we want to make sure we're taking the value of what you're buying into account. And when I mention that, of course, real estate, another wonderful, unique thing about real estate is it's one of the very few things in our lives that we purchase outside of other investments that consistently, historically appreciates in value. There's never been a 10-year period in the United States where real estate has decreased in value. All right, so let's quickly go through some math here on renting. So we've got your rent. We have a loan with FHA, we have a conventional loan, and we have, Austin is in the way, but that's okay. We have a VA loan is what it states right there. And we're showing the different in monthly payment. And the monthly payments here are more expensive than your rent, right? So you might think, oh, this is no good. I can't pay more to own this house than I'm paying for rent right now. Why would I do that? I can live here for less, because there's more than just living when you own the house, of course. Exactly. So let's see what's going to happen in 5 years. In 60 months, if we use historical appreciation rates, which actually are pretty similar to the forecasted rates right now, for an extended period of time, it's in the 4% range, by the way. That's your rule of thumb for like real estate appreciation over a long enough period of time. Historically, it typically is right around 4%. How much equity do you have when you rent it for 5 years? You've got none, right? You just get out.
Yes.
How much equity do you have taking an FHA loan after 5 years? 98 grand, 100, almost 90, right? This is that time value of money equation that is hard to conceptualize for people when they're buying a home sometimes, especially a first-time buyer, because you're just thinking this is more expensive, right? My monthly payment might be more expensive. I'm going to have to come up with cash for down payment and closing costs. But this is really incredible. And this is only 5 years, right? Now, maybe for your first home, you may only live there for 5 years, and then potentially you could sell it or convert it to an investment property. But frequently then at some point after that, many people will purchase a home that they plan to have for 10 to 20 years. And then this math obviously only works more in their favor. Mistake number 3, ignoring the first-time homebuyer incentive programs. So when you qualify for a home, there's programs where they give you grant money and things like that, but also within the individual loan parameters, sometimes there could be benefits to being a first-time home buyer. So first of all, the definition, first-time home buyer is someone who has not owned a home in the last 3 years. That is the lending guideline. That's the definition that banks use when they qualify someone. Types of mortgages, you can have a conventional mortgage, okay? You can have an FHA mortgage, you can have USDA, which is for rural areas, VA if you're a veteran, or jumbo if your loan amount is over a specific limit. And which one is best for you? There's not necessarily a good or a bad. It depends on the individual and their situation, right? Some people say like, oh, FHA loans are for people with bad credit. It's not necessarily the case. It depends on a number of different factors, which loan will suit you best. And again, in your consultation with a lender, they'll review these things with you and review the pros and cons of them. All right. An FHA loan, just for some quick definition stuff here. FHA loan provides mortgage insurance on loans made by FHA approved lenders throughout the USA. So the federal government, in a sense, is backing your loan. Okay. They're not issuing a loan, they're not insuring the loan if your roof has, right? They're not insuring the house, but the loan is being insured by the government. And they've created this to make sure that they can continue to make home ownership possible for people. And the reason being also is the conventional loans, where the guidelines are created by Freddie Mac and Fannie Mae, they take somewhat of a more conservative stance in qualifying. There are certainly benefits to both. And again, as I mentioned, it really depends on the specifics. You don't just want to make a blanket statement and say this loan is right for me or this loan is wrong for me. Just some things about FHA loans. The minimum down payment is 3.5%. You can qualify down to a 600 or even lower credit score than that. You can refinance FHA loans with ease, although it's not always necessarily ideal that you do. There's an exit strategy for FHA loans. Sometimes they have lower rates, and really they're more lenient with regards to credit score. If you have a lower credit score, sometimes the expense of the loan, it would be a much costlier loan with conventional as compared to FHA. There's different terms that you can select. They'll allow you to qualify to higher debt to income ratio. Let's say part of your income is cash and we can't document it. So we realize that the affordability of the house isn't as bad as it looks on paper. An FHA loan could work for you there. And you can finance a larger amount of your closing costs. And that is something also that you can go into greater detail with, because it's something that's actually more challenging now than ever to be able to finance your closing costs into the loan because of the competition in the market. And if you want, I can touch on that with you more. The conventional loan, again, is it's not offered or secured by a government entity. It's available through 2 guaranteed private lending groups, Fannie Mae and Freddie Mac, who did have their government sponsored. They're called GSEs. So there's some government connection there, of course, for regulation and control. All right. FHA versus conventional. Sometimes the biggest myth that I have with FHA is people say to me, well, I don't want to make a big down payment, so I think I want to get an FHA loan. Conventional actually will allow you to put less down than an FHA loan. You can get a conventional loan with 3% down. All right, so as far as cash goes, this is something that goes into that thorough pre-approval and making sure that you show where it comes from. Sometimes people get a little bit defensive when we ask them questions like, well, what do you need to know that for, right? Like, I'll be able to do it, I'll come up with the cash. But the loan guidelines state to be carefully documented, right? So different ways that you can get cash, of course, beyond your savings account, 401k or retirement accounts. You do not want to take money out of a retirement account or 401k account to buy a boat or take a fancy vacation, right? But if you're taking money out of that asset to acquire another asset like a home, it can be beneficial, right? That can be a way to do it. Gifts are acceptable. Sometimes people get very concerned with giving gifts and the gift tax and stuff like that. And the reality is it shouldn't be something to be concerned about. There's a lifetime gift tax exemption of millions of dollars. So if someone wants to give you $30,000 for a gift this year, it's perfectly fine. And it's very frequently used, and most frequently with first-time home buyers. This is, and they'll say frequently, you know, your first house is basically the only house that you need to save for. Because when you sell your first house, the equity that you get from selling it in most markets covers your down payment and closing costs for the next house. You can obviously then cash in stocks or bonds. What you cannot use, and it's very important that you understand this in the beginning of the process, you cannot use unsecured debt like a credit card or a personal loan. If you already own real estate, you could borrow off that real estate. That's called secured debt because it's secured by the house to buy another house. But as a first-time home buyer without owning real estate, there's no debt that you can take on to acquire the property. Okay, you could borrow from your 401k loan, just to be technical, but that's coming from the 401k, right? But no credit card cash advances, no personal loans. No undocumented cash. We have to very carefully source where every dollar comes from when you buy a home. And it's that like 1% rule where sometimes people are like, well, why? Oh, what do you mean? Why do I have to show where this came from? And it's like, well, it sounds like you're an honest person. But the reality is a very small portion of the population that is not honest. And they use this to commit loan fraud. There's money laundering implications when you buy houses without undocumented cash. And even nowadays, of course, terrorism implications when you do that. So the bank has the responsibility of making sure they clearly show where all of the money is coming from to purchase the house. All right, mistake number 4. And we've touched on this, and through some of these examples, I think you're starting to see why it's so important. But the importance of getting a thorough pre-approval, I actually jumped in right away and we talked about that, right? You do not want to find yourself under contract to buy a house and then find out that there's some hiccup in your mortgage and you're not getting the house.
Yeah, most of the time too, good agents are not gonna show you a house until you have a pre-approval.
Yeah.
To avoid those types of. We're busy too.
Oh yeah, and I mean,
more of like, we don't want to show you something. You're like, oh, this is it. This is the one. We got to do everything. You're like, oh, I'm like $100,000.
yeah. So expectation setting is important.
It's just
and,
there's no time for that to happen.
it's you can't do that. Yeah, and we have very clear communication with the listing agent also because we do this very thorough pre-approval for a client, but we want to get as much out of it. So when you make an offer, we don't just send a letter and let the agent wonder if we did a good job or not. We communicate very clearly with the listing agent to make sure they know that the pre-approval is in place, and we highlight excellent credit, low debt to income ratio, significant reserves, things like that, so that they really feel good about it. Because the agents certainly know, realtors know that the mortgage is by far where things can go south the most. All right, so credit, income, down payment, that's pretty obvious. They're the 3 things, really assets. I like to prefer to call it credit, income, and assets is what we're going to assess. The mortgage pre-approval helps you determine how much you can afford. Now, the pre-approval is actually driven by monthly payment. Your debt to income ratio is what determines your pre-approval. Frequently, so that clients have an idea of what range to look in, it'll be translated into a sale price. But again, it's your monthly payment that drives it. And as we discussed earlier, you can have 10 houses at the same sale price and all 10 could have different monthly payments. So that's something to keep in mind, and that you want to review with your lender is understanding the correlation between sale price and monthly payment. Between pre-approval and pre-qual, by the way, you don't ever want to do a pre-qual. Pre-qual means I tell you some information, you tell me some information, essentially is what that means. You say you make all this money and have all this money in the bank. All right, great. If that's true, I guess I can give you this loan. That's all pre-qual really means. I might run your credit, right? Typically, you'll run the credit. The pre-approval is you run their credit, you review their credit, you collect all their income docs, you collect all their asset docs, and you collect all supporting documentation that is needed. Because these questions and these documents are going to be needed to give you the money. So there's no reason to gloss over this or take shortcuts and say, all right, I've got enough. Go find the house. We'll finish later in 2 months, because that's where that one detail could be hiding, right? So you want to make sure that you do a very thorough pre-approval. This is a form that we threw in here that just shows an example of what's happening in this market real quick, where clients will sort of pick their poison, and there's many different ways that Brand and his team will help incentivize a seller, as he mentioned. They get to know the seller and get to know the listing agent and what will attract them. And there's different things here that you can review as far as that. This is just an example of some things really that you could do nowadays in this market to be as prepared as possible. You see there's 18 lists here. So you don't want to go through all these 18 options on Saturday afternoon when you're getting ready to write an offer in a competitive market. You want to have prepared for this in advance so you can know what tools to pull out, right? And you've already thought over and considered the options. It's very hard to learn all these concepts and strategies on the fly as you're writing an offer. So preparation is very important. Potential mistake number 5 could be to use your local bank. So banks have a element of trust because that's where you go and where you've had your account since you were 10 years old. And you know them and they know you, right? And it's somewhere that you can go to and you know they can give you a loan. The challenge potentially with banks is the structure that they have in issuing mortgages, where sometimes you will walk into a bank and you may be speaking to a manager or an assistant manager or even a teller. And their main focus at that point is not to prepare you and educate you. Their main focus at that point is to sell you, because many of them have incentives for leads and for production. So the challenge there is you may not have the correct right person that you're speaking with at first. When you move to a loan officer, sometimes you will find that larger banks can have what they call overlays, where they have specific rules of their own on top of the guidelines set forth. And then sometimes communication can be a challenge as well because of the nature of the bank. The reality is in this business that there's nothing wrong at all with working for a bank, but you have a captive audience right there, right? You're situated in the bank and you know that people feel comfortable using the bank because they've had their accounts with you for a long period of time. And that's how they generate business. You sit in the desk and people come in. And the reality is that sometimes the motivation can be a little bit different. For the lender to complete loans and give the right service and make themselves available for people. And that can become a significant detriment for you as a buyer, right? They're much more transactional in nature, not across the board. There's very few absolutes in life, of course, but frequently you'll experience when you go to a bank, you don't quite get that same advisory experience that other lenders can provide. Last one, skipping a home inspection. Brant mentioned this. I have to be careful with this because, but it's and I told Brant today when when I buy houses, this is the last thing that I waive. The last thing is the home. Now, what I will do though, same with appraisal gap strategy, where what if I pay this much for a house and it doesn't appraise for that much, and we'll touch on that. So, is the inspections. I would at minimum, I've bought houses before where I will say, all right, I'm just doing the inspection for informational purposes. And the option to get out of the contract if there's something that's significantly wrong, so I limit my exposure. Or you can say, I'm going to do an inspection, but I'm only going to come to the seller if there's issues over $5,000 or $10,000. You can limit your exposure that way. But as Brant mentioned, I completely echo his thoughts. Buying a home, even new construction, doesn't matter necessarily when it was built. Sometimes that can be even more problematic. But buying a home without a home inspection is something that people are doing more frequently now than ever. And the reality is, as I mentioned, in Brant's opinion and mine, it's the last thing that you want to waive. You can limit it. Like I said, you can say, all right, I'm going to do an inspection, but I'm not going to ask you for money. They're just going to give me the option to get out of the contract, right? And I'll do it in 4 days. I'll do it quick. You can say that to them. But to completely waive it sometimes is the impression of what you have to do to get the house. And who knows? Sometimes it is right? You could be competing against people who are doing that. But as far as actually consulting you and advising you, and allowing you to be in the best position possible, waiving the inspection could really be an expensive mistake.
Especially if you have foundational issue or something that's not caught.
Termites, mold, things in the
Yeah.
walls. There's all these things that the untrained eye can't pick up on, and even that the trained eye might not be able to detect until they really thoroughly, carefully inspect it. And that's what your inspector does, right? They go through and give you a greater knowledge of the home. And then that gives you, of course, you know, a better ability to make the right decision. All right. That is about everything that I have in the slides.
I think the next one is Q&A, open up for any questions, comments, concerns. Ahas.
Well, I wrote down some questions. First thing, I would love, if, just from both of you guys, you know, either one that would be best to answer. I'm just curious of, like, you know, because you deal with this market every day. How, like, if there's a house that has more than a couple bids on it, how often are you seeing a full waiving of inspection? Is that greater than 50% of the time at this point, or?
Yeah,
Yeah.
unfortunately, yeah. It's
Yeah,
just like I was saying to her, like I and Angela, I would never
right.
personally recommend to waive inspections, but just the fact is right now, that's just what's happening.
Right. And yeah, I think, you know, I don't want to set off the impression like I'm this guy that's looking for reasons not to buy. That's not me, right? Like,
Yeah.
I definitely want to buy, but there's just certain stupid things I'm not going to do like that. Like, obviously, a complete blind inspection
Okay.
isn't one of them, right? So I know that the risk is that the market will keep growing and the rates are up, right? I know that risk, but there's also another risk that you run into a huge hornet's nest of stuff waiting a complete inspection.
Yeah.
Yeah,
That's-
and it's not like it's impossible to
Mhm.
get deals done. I've still gotten deals done where we
Yeah.
have inspections.
There's yeah, I
Like,
don't
if
know
there's ways to
exactly.
do it, it's just, I would say on the turnkey, move-in ready, especially in Newtown, if it's priced right, it's going on a weekend.
Right. Yeah,
It
there's-
really just is gonna depend on area, what you're looking at. I wouldn't say so much like, what's the, like, condition of the house,
Right.
because even in Newtown, like, sheds are selling for way over asking in a day.
Yeah.
So,
And there's also an option too where an inspector can go on the showing with you.
yeah,
So
Okay.
do a walk and talk inspection,
So-
but no, not full in depth.
yeah, they're not gonna do a
Right.
full inspection, but they'll walk
A
with you.
good idea. once-
They'll look at it, if they see something crazy, they'll like, okay,
Right.
but it's, I mean, you can't legally go in there, because if they say they find something, you go into contract before it's continued, so you can't put that up. They're
Yeah.
gonna be like, there's avoidable, there's nothing you can do about that.
Yeah, because one of the things that I think you talked about as well is just that, you know, there's so many different factors causing the low inventory right now. You know, there's material issues, there's labor issues, there's, you know, obviously inflation and all that. So, you know, I'm kind of on the, like, my wife and I want to buy, right? Like, you know, I'll be 37 next month. She just turned 30. And, you know, we're both at the stage of our life, you know, she's a nurse, I'm, you know, senior IT manager. You know, we're at the stage of our life where it's just, we were there in January, February of 2020, and now I just want to kick myself because it's like, you know, at the time the pandemic starts, and I'm like, well, maybe we shouldn't be going out. If we get this virus, we could be in trouble, you know. And it's like now I go back in hindsight, knowing what we know now, I wish I had. But so like we definitely want to keep what we've been doing is we've been keeping our eyes open for a lot of these things, you know, just for houses that we like, right? That's the first step.
Yeah.
But, you know, inventory has been a big problem, right? Like buying a house without a garage or some things like, just seems like, why go through that trouble and then down the line? But one question I had for you on the loan side is like, so you have your principal and you have obviously your interest and that fluctuates with the market. But let's say I bought, and I agree with you, equity historically has gone up. We haven't seen inflation that's crazy in a long time, but equity in history has gone up. So one thing that I guess is like kind of in the back of my mind is, you know, let's say that, because there is a house in the family that one day I want to buy and keep in the family, right? So let's say I buy my first home. Is it going to be as easy to get equity and sell without losing money in 5 years or 7 years or whatever, right? Like, I get that, that's part of, and it's a tough question to answer right now, but that's part of what's in the back of my mind.
Yeah. So, I mean, and it's a great question, right? For the shorter term, you know, when you're thinking about, as I mentioned, if you're buying the house, and you're like, well, this is the house where I could see myself living until I retire. So, you know, people, until my kids are out of college,
Yeah.
whatever it is, right? That 10, 15, 25-year home, it's different then because you know, you have more certainty, of course, that you're going to have more equity. But the 5-year is a very interesting question. Now, here's what we're seeing. You know, that low demand or low supply, which doesn't look like it's going to change, and this high demand, which doesn't necessarily look like it's going to change, leads to a continued growth in values. Okay, now, could appreciation slow down? Of course, right? We have had really, really strong appreciation. It potentially could slow down. Do we see it going backwards though? Do we see home values actually, we could see the growth slow,
Yeah,
but do we see the value actually decreasing? This data in this area, especially when you look at historical performances, doesn't necessarily feel like that.
yeah,
If you go back to 2008, when the sky did fall and real estate was really connected to it, right? With the loans that were given, that horror story that you saw in the news, it wasn't in our backyard, right? That was Florida,
yeah.
Utah, Ohio, Arizona, Detroit, right? Where the
Just
auto
right.
industry got shut down and then the whole city basically got shut down because they're relying on that one sector.
Yeah.
This is the densest part of the country in the Northeast, basically from DC to Boston. It's not the densest, but very dense, obviously. And it has a very diverse economy. So as we even look historically in this area, it'll grow at the slowest rate. Even right now, you look at year over year appreciation rates, this area is less than the Southwest or West or the South, right? But that means it goes back, it decreases at the slowest rate also. You know, home values flattened out in some neighborhoods. Certainly they went down a little bit around here, absolutely, in 2008, but it wasn't that giant shift that you saw where the house that was worth 300,000 was now only worth 150. That didn't happen.
Right.
So that gives you confidence.
Not really since 2008. I think the last time that happened, when we saw things go backwards.
And when you look, this is a slide that I absolutely did start incorporating that I could share with you later.
Yeah.
It shows real estate values since the 30s, and it shows recessions also. This is the only recession since the 30s where values went down a little bit, and it's because of those, you know, the housing market was so connected in part to that. So it's really interesting. Like recessions don't bring decreases in values. What
Yeah.
recessions do frequently bring, and what our Fed bank, even though they're behind the ball, is now actively working to change, is they do bring lower rates right now, typically. So you mentioned inflation, right?
Yeah.
Inflation is the arch enemy of mortgage rates.
Yeah.
So when inflation goes up, investment banks on Wall Street pull their money out of mortgage-backed securities because that stable, consistent return has now been weakened because the dollar has been weakened. And they put that money in the equities market, right? Stock markets, where there's the potential for the market to move with inflation, right? And protect them from it. So when that happens, they pull the money out of mortgage-backed securities. So just mechanically, of course, that drives interest rates up when that happens. And mortgage-backed securities have fallen off a cliff this year. It started a little bit in January, and then in March, it was really tremendous. And we've seen rates spike 2% from last year, right? From the end of last year until now. You know, we were in the 3% range. Now many programs are up close to 5%.
Yeah.
So now rates are cyclical. So there's a very good chance, because the Fed now is taking significant
Well, they have
measures to
to now,
fight
right?
inflation,
Yeah.
right? That at some point, something's going to be happening where this is going to start to work. And mortgage rates do appear within the short term, the next 3 to 5 years, maybe even as soon as the beginning of as next year, rates are going to cycle back lower. So the strategy that we advise for our clients is obtain the asset now, right? Because it looks like the
Instead of
value of the house,
refinance later.
yeah,
Yeah.
and when the rates go down, you can refinance and take advantage of that by lowering your payment and then leveraging your savings.
You factor in like basically, is it worth it with closing costs and all that? Usually when you refinance.
Oh, we do all of that. You don't respond to that letter you get in the mail that says, hey, do this with no fees and save $40.
Yeah.
Yeah, I got people call me like, I bought this house in 1992. I have 23 years left on my mortgage.
Yeah.
And they have no idea what they did with it. They just kept refinancing when they got that letter in the mail. So you
Yeah.
need to leverage your refis,
Yeah.
right? And that's as I mentioned, you have to leverage your savings, right? If you're refining and saving $300 a month, if you don't have a plan in place for that, it's going to evaporate most likely.
Yeah.
So it's not only completing that refinance, but when you do it, you want to, and you also want to review, like, do you want to buy another property? Do you want to improve your house? Are there other expenses? Do you want to consolidate
Right.
debt? All those things need to be taken into account when you refi, not just like, this is a couple bucks, you know what I mean? Without knowing what you're doing. And that,
And
and
have an opportunity really to address some other issues.
well, that's just
Yeah.
it. And you've lost that opportunity by not
Yeah.
doing your research, you know? And the minimum, what we did for a lot of clients is we refied them. They'd call and be like, hey, I want to do like a 20-year, right? Or a 15-year, rates are so low. And we did all the math and worked up models for them. And some stick with the 30,
Yeah.
and they took the savings and they invested it in safe, diversified investing. right? If you think your house on average gets 4%, safe diversified investing gets 6 to 8%. And the longer the duration, the more the return potentially. So their plan is, all right, instead of me taking a 20-year mortgage or 15-year mortgage, I'm going to keep the 30. I'm going to invest the money, and in 15 or 20 years, this account will more than likely have enough to pay off my mortgage plus a significant amount on top as well. And all they did was move some pieces around. And we'll set the expectation for this, and then we'll actually connect our clients with like a financial planner to get deeper into the math to make sure that fits. But the equity question, to answer your question, it's hard to tell where we're going to be in 5 years
No,
exactly.
That's what I said at the beginning,
But-
like, all these, because I've read so many economist articles, like really respected economists from Forbes, from the Wall Street Journal, that have been wrong over and over again. So now I'm just like, I'm gonna bet on myself and try to make the best decision, you know?
Yeah,
The
the
Fed-
other thing too is even if, like, say this isn't gonna be your forever home, like you buy a great Star Homes townhouse condo, something like that, you own it for 5 years, and you're ready to upsize, keep it, that's a rental property. That makes you being paid off, and you're making money, and you have equity, you're just continually gaining equity while you're living in the house longer and then making money.
I always overthink that too much, because I'm like, I think like that's great, right? Like you could, like you definitely, like that's what I'm doing right now. It's somebody else's house that's already paid off that I live in. That's why she didn't raise my rent, you know? So it's like, she's making an income off of it, but yeah, but like my uncle in California has told me like horror stories, like people not paying their bills, he can't get them out, and now he's on the hook for 2 mortgages, you know? So,
Yeah.
because the laws are just so crazy out, especially out there
California.
with evicting non-payers, yeah.
Just the prices in California.
He ended up breaking the law and drilling the lock and just putting a new lock on and saying, if they arrest me, they arrest me, but I can't live on no income for that long. So,
I feel like those are few and far between, but it does happen.
I have investment properties. If you have, like, you just have to take action.
yeah, you just have to.
And in this area, you have to take action. You know what I mean? Like, and there's the right action that you have to take. You know what I mean?
You
Not
don't go over the top, you just,
Right,
you know,
no.
do secure your
you
property.
you follow the right things, you post in the right way, you take the right steps, and like, it's not.
Yeah, no, it's a
That's
good
why you
idea.
invest too, 'cause we'll list it as a rental property and we'll find you a tenant. We know
Yeah.
what's on.
Yeah. Yeah, no,
Then
sure,
We're
like,
not gonna let.
like property management type thing,
Yeah,
yeah.
we know.
That's a good idea too. So one thing I thought about a lot, like when I was looking the last 6 months or so, as the prices like were really high, right? Was like, okay, so the rates were at the time historically low. And, you know, I was still looking during that time, but you guys know the inventory was just terrible, right? There just wasn't much in the area. So I ended up not buying anything, but I mean, so I look at people that are bidding. So I agree with you. I don't see the prices coming down, right? That's not what I'm waiting for. But I see people bidding like very large amounts over the asking price, right? And I've talked to some of my friends that have done it. Oh, well, the reason I can do that and bid X over the asking price is because the interest rate is this, right? And my monthly payment is only this. But when you're trying to sell let's say I'm trying to sell my home in 5 to 7 years and the interest rate's 5% and it's not 2.5%. My ask, like, I'm not obviously not going to sell my house for 100,000 less than I paid for it, right? So what I was, I guess, kind of concerned about, and this might be just me overthinking it, was, you know, if I bid over asking price and got a house I'm happy with, you know, at 2.5 or 3 or whatever at the time, am I going to be able to sell it to somebody else that's going to have to pay a higher rate in 5 years, you know?
Yeah, now, the equity, that, you're right, so that's independent of interest rate, you're just
Yeah.
discussing the price that you go up to because you're
Right.
able to now. Or
Right, because
last
of the rate,
year,
which might not be.
because the affordability was so low. Yeah, and I mean, there is some sensitivity to cycles also. So it's always hard when you say things like in 5 years. Do you mean like 60 months or like
Yeah.
4 to 7 years? You know what I mean? Things like that too. But I understand where you're, you know, those
Well,
concerns, but
yeah, I mean, but like you said, I mean, there's also other things too, like in the future, the rates are not gonna stay, whether higher or lower, where they're at forever. You know, there's always gonna be opportunity in the market down the line, I think. So I think of it that way too.
Yeah, I mean, we're constantly learning, like KW is awesome. Our
Yeah.
founder, Gary Keller's always, there's so many different options, and we just saw a bunch of graphs too. Just showing the cycles, and it seems, we were just talking about it earlier, was it 10 years? If you're owning for at least 10 years, you're like, no, you're not gonna
Yeah.
lose money. It's not gonna happen.
Yeah, so like, I mean, like you
It's
said.
not-
Unless we all go out to work and then come home to our little closet shaped pod and live our real lives on the metaverse. Which I certainly hope is gonna happen.
So I think I mentioned, I did go out for a couple of, just to see kind of like, not serious ones, right? Just to see where I'm at with like pre-qualifications, right?
Yeah,
To see what the rates look like, what I would get approved for. So you mentioned, I'm pretty sure, even though I'm a first-time buyer, like just from what I've heard, I'm pretty sure I kind of want to stay away from the FHA, right? I mean, because I've heard that, like, I don't know if this is true, but like I've heard from other real estate agents that, those loans aren't really getting accepted right now with the competitiveness.
if you qualify for, that's true. Sorry.
My two first-time buyers, I would close the work conventional and do FHA.
Yeah, so
And
if,
actually,
You'd actually have to have
saving
more supply than demand at that point, to use it, like, to effectively, right?
Yeah, well, and like you were showing,
No.
conventional, you can,
No?
no, it's not that bad.
no.
Okay.
Right, so with careful communication, I have clients that have offers accepted with FHA loans every single week,
Yeah, that's not.
right? So, but again,
I'm an eight.
what you have to do is, so the reason, why don't they take
I'm just trying to
FHA?
find
'Cause
the best one. I'm 800 plus credit. I mean, I could do 8 or 1.
Yeah, you have enough, yeah, so you probably, just from saying that, I'm not gonna ask any more questions right now, but you probably, conventional would probably be a better option for you. than
Yeah.
FHA.
And you can go less down, like eventually you can FHA. FHA, the minimum's 3.5.
Yeah.
Conventional, you can go all the way down to 3.
You did say you were going to mention something about the cash and closing costs. Was that, it's
So-
hard. I guess it's hard if you're not paying them in cash right now, or.
So here's, yeah, so seller, when you talk about like financing your closing costs, right? The mechanism is called seller's assist. Now, it gets a little misconstrued because the name is seller's assist, where you'll hear people say things like, I didn't pay my closing costs, or the seller paid my closing costs.
Yeah.
But the reality is seller's assist is just that mechanism that allows a buyer to finance some of their closing costs into their mortgage. So I'm just gonna use really simple numbers. Let's say you see a house that's 300,000 and it's gonna take you $35,000 for down payment and closing costs.
Right.
But the house needs some work. You wanna do some updates and things like that. You're like, this 35 grand is really gonna deplete most of my savings that I have. If I could do it for 25, that'd be awesome, right? So, and let's say they're asking 300. Let's say it's in a different market where homes are actually staying on the market for longer than 5 days, okay?
Yeah, 2 days.
So your agent Brant looks up the comps and he's like, well, Justin, this house has been on the market for like 4 weeks. It hasn't sold yet. It's been sitting at 300,000. From looking at the comps, I think this place is really worth closer to like in the 290 range. All right. So you could do one of two things. You could offer 290 for the home, and then you'd still be responsible for an amount in down payment and closing costs pretty similar to that 35,000. It wouldn't shift that much for $10,000 difference. Or you could offer 300,000 with a $10,000 seller assist. So first of all, to the seller, they're getting 290. If it's 290 with no assist, or 300 with them giving back 10, they're sitting at 290. Okay. Now for you though, that's $10,000 less that you have to contribute to execute the sale, because what happens is the seller credits $10,000 from their proceeds to go towards your closing costs. So now instead of around 35,000, you can acquire the property for around 25,000.
Right.
There's two things now that make this complicated. Okay, it's a very competitive market. That house that gets listed for 300, someone's probably going to
You could
offer
already offer
330 for it, right? And they're waiving things. They're not asking for anything on top of it. And the challenge that really connects all this together with seller's assist is the appraised value. So what happens also is when the house comes on for 300, people are competing $20,000 to $40,000 over asking, right? Or even 15,000 or 10 over asking. They're competing over the asking price. The challenge there is that when you buy a house with a mortgage, the bank requires an appraisal to be complete. They don't just say, well, it's a free market, buyer, seller came up to a fair price, I'm sure. This house is collateral for the loan. So if you purchase a house with 10% down, the bank doesn't view it as, all right, we're giving Justin a 10% down loan. The bank views it as if, all right, we're lending Justin 90% of the value of this home. It's loan to value, LTV, and that's what the bank views. So what happens is they use the lower between the sale price or the appraised value, right? So let's say you competed for this house. It was listed at 300. which in most cases, not always though, these guys can attest.
Yeah,
Means
my
the
most
listing
recent closing, I got it at asking price, like he was saying, we were gonna offer under, because he needed to save a little money on closing costs, we just asked full price with the selling. So it's possible, it happens in this market. Depends on your area, depends on, like you said, if it's been sitting for a while.
Right,
it might
and
be
that's-
priced right, it might not be a very
Yeah.
as desirable, but I mean, it's a great starter home for him, he loves it, he loves the neighborhood, and I was able to get him that deal that is just really not. happening
Yeah,
right now.
and I'm not like the guys who be like, all right, yeah, I have to be right here. Like, I'm obviously willing with the way things are to be a little bit more negotiable, but like with the buyer's agent, you discuss all that strategy in the beginning, right?
Yeah,
Like,
for
this is
sure,
what
you're
I
gonna
want.
know. Yep.
And then like maybe you'd be in touch, hey, this house just opened up that what meets all, checks all your boxes.
Yeah, that's the importance of working with, like, right now, there's probably, I don't know, like 9,000 agents in Bucks County, something like that, probably some absurd, I think, that's a number a while ago, but you look at that, but like, maybe only 10% of those agents are that control the market.
Right.
Because some people they got their license like, oh, this looks fun, let's get it. Don't really do anything. I'm sure it's the same with mortgage too. I'm sure you're seeing a lot of lenders coming in that's like, oh yeah, this looks cool. Seems fun, let's do it. And they realize, oh, I have to actually work, I gotta do it. So I guess the point was the importance of really finding the right person for you.
Right.
That's
Yeah.
gonna work. On my end too, like I'm not getting paid until we close.
Right.
So
So we're both motivated
we're
for the same
both very
thing. Yeah.
motivated for the same thing, and my motivation is not necessarily money. My motivation is more, it feels good when I get you
Yeah.
what you want. That's the whole point of
Hey,
what
the
your
money's nice
motivation
too,
is.
when you get a
Yeah,
deal
I
done.
mean,
you
I'm
know,
not gonna
yeah.
lie and say the money's not super nice, but to me, it just, I mean, I'm about to have a listing, so it'd be nice to like not do the work for once,
Yeah,
because right now, as a listing agent, you really don't do anything.
yeah,
But it's not as satisfying. I would say it's much more satisfying, and gratifying to me I hear your story, I hear what you want, and I go and do that for you. We're best friends for life. That's the whole goal for me, and I'm sure Sean feels the same with his clients. That's really what our motivation is. We just want to help everyone we can, help the community. It's a customer service business at the end of the day.
I imagine, correct me if I'm wrong, I'm sure it hit your industry, I mean, just like the low inventory, right? There's
Well,
probably, I mean, you get, obviously, the agents will get a little bit more of the higher price, but there's just so much less inventory. Is there as many agents out there anymore, you know?
yeah, that's just what it
Yeah.
comes down to. Like I said,
Yeah.
there's a lot of agents, but maybe only like 10 or 15% are actually the ones controlling the market. And
Yeah.
Us at KW, we control the market share in Bucks County. We have, if you look, I had a graph or something, just us to toot our own horn, but compared to all the other brokerages, we are like leagues ahead of market share. We're dominating it. And that's because we're here doing stuff like this. We're learning, we're providing value, we know what we're doing. We have a great support system. It's really just comes down to, I mean, I can't say what it was like maybe 2-3 years ago because I didn't have my license and I wasn't a realtor. I'm learning in this market, so I guess that helps too, being a buyer's agent, because this is what I know. I don't really know the other market or a crash or anything like that. I know this, so what I'm learning is what is useful right now. That helps, but
Right.
to answer, I don't know if I can answer the question on what it feels like now than it did then, because I don't know. I wasn't in this industry then. so.
I'm sure it feels just, I mean, the end goal is the same, right? So I'm sure it's just,
Yeah, then goals always
yeah,
help as many people as you can. It's just you got to put a little extra effort in on the buyer side. The other side, not so much. But again, I mean, it's really hard to find listings. I mean, people want to sell so they can make money, but they don't know quite where to go.
no, yeah, I mean, my whole thing, I hope that this happens, obviously, is I hope that, I'm not expecting any decrease in the market, but I do hope that we start to see stuff stay on longer, more inventory as the rates do go up a little bit. I hope, right? I hope I'm doing a little bit better than some of my peers. my age. I just, yeah.
No,
I don't-
I've had a healthy fear for the first time in my career that people in like the lower, like at least certainly Bucks County, like people, you can't go to Levittown and get that house for 200 grand anymore. Like you pretty much consistently.
And you don't want to pay a lot of money, no offense, you don't want to pay a lot of money to be in Levittown or Bristol. Like, if you're gonna, like, come on, if you're gonna spend money, you want to be around.
love
Yeah.
Levittown. Nancy lives in Bristol.
Hey, there are some nice neighborhoods.
The ver-
There are some very nice neighborhoods there too. It's just, yeah, I'm trying to.
I have a rental in Croydon. I have an investment property in Croydon with an in-ground pool. It's like the hidden
Yeah.
neighborhood. Yeah.
No, I mean, my landlord lives in a neighborhood and her house is awesome. So it just depends which street, which is good.
No, we get your point though. It's
Yeah.
interesting, you know. So
Just for the only other question I had, just from a loan standpoint, like, cause I've been actually interviewing for other jobs, like when I change jobs, is that like a big thing where you gotta go through a pre-approval again, or is it submit new paperwork?
like most other questions with a mortgage, right? It depends. So you mentioned you're an IT manager,
Yeah,
and are you staying in the same field, I imagine?
I would imagine so, yeah.
So the same field of work is a good thing because there's a natural progression. Now, the new job that you're taking, would it be a set year? You're on a set yearly salary now, or are you paid hourly?
So I'm on a set salary, so the only thing that might change with me is that, like, right now I'm in management, right, where I oversee like the operations side. I might go to sales, so it's like, let's just say that let's say I was pulling in a base of, 40, and then at sales, my base is now 100, but I'm probably gonna make more than that with my commission, right?
Mhm.
At the end of the day, like, it's not gonna swing it so much that I'm not gonna be able to get a house in my range, I think. But I mean, obviously, it'll be a little bit different on the base salary, a little bit slightly lower.
Yeah, so the loan guidelines have a heavy emphasis on continuity of employment, right? They want to know where you've worked for the last 2 years. They want to understand there's a good chance that you're going to continue to be employed in that field. So if you do switch from a base salary to a base salary plus commission, you may only be able to use your base salary and qualifying most likely until a certain amount of time has gone by. It can be anywhere from 6 months to 2 years, depending on the program and your situation, before we can use that. Because what can sometimes happen is like, oh yeah, I got this commission job, and now they're giving me a little base salary, and I like knocked it out of the park, and I sold this one, and then you never saw anything else. Right. And then all of a sudden you stop making payments on the mortgage we gave you. And you're like, why can't you make this? I can't afford it anymore. I had that one big deal, and then that was the end of it. You know what I mean? So
That's
it's
why
like,
that's why my goal is to find a house soon, close, and then change job.
yeah. No, but again, though, and this is something that you plan for in advance. Like, let's just say those numbers that you mentioned are the figures where you're a 140 base, and then now you're going down to 100 base. What you would do is run it in different scenarios, so you understand that in that worst case scenario,
Yeah.
and you know your options, because sometimes the timing doesn't coincide.
Right.
Right? Maybe it's like, well, I got to take, if I want this position, I got to go now, but I didn't find a house yet.
Yeah.
So you want, it's great that you're thinking about this stuff and that you're doing your research. That's awesome.
Yeah, that was all the only questions I had written down. But I do want to thank you guys for the time you put into putting this together, because when I saw the letter come in the mail, I just thought it was a good. I really went into this whole process I did a lot of research, as you can tell just by the questions, but it's been hard to connect with, I guess, real estate in the local area that have really had a good feel on things. So I appreciate definitely a lot of great information.
Great job.
Yeah.
It was very informative on our part.
Yeah, I'd love to get both your cards.
Yeah.
Yeah, absolutely.
Yeah, I mean, even if you want. Speak the week after.
I took some notes. I want to just, I'll probably, I want to have a conversation with my wife, and I think both of us will probably want to chat at some
Do you have
point.
a pen up there?
Yeah, put it in my pocket.
Oh.
Put it in my pocket. So I mean, that's my cell. That's the only number that I started.
Me too.
I'm not-
I canceled the landline finally.
Yeah, I only have one number on here. Actually, no, there's a brokerage numbers on here. I'll call that.
Can I get your card?
Sure.
Thanks. Thank you.
Thank you.
I appreciate it. You never know what.
That's
I've
good.
worked at hundreds of Angela,
Yeah,
can
appreciate it.
you know what I mean?
Yeah.
It's just the nature of someone.
No, that's like I said.
You know, I've done it.
Yeah.
You know, and I left the way for that.
How long you been with this fire?
Since January.
I assume that,
I mean, good people,
it was like a
I mean,
local
my-
site too,
yeah,
like what
right.
you guys have listed. I'm just curious. I'll just take a look at the area.
A broker. They're good. The
Or-
process.
Yeah, I
I
mean, we
mean,
don't-
that process. You just have that, like,
Yeah, I can just look at anything like in the area.
I don't really trust you.
I
I'm
agree.
nothing personal, you know,
Right.
and I just keep checking to make sure.
I think once we
No one
define,
That's basically.
You know, I'm
yeah. What are you looking for?
What are you looking for? Alright.
Price range.
Like,
Price range.
only seamless loans as far as underwriting.
Yeah.
Awesome. They're getting, well, obviously you spell it out. The key is not letting them, it's telling them before they ask the question.
Right, you have to put it all right now, like, you have no questions, you open up that conversation line, it's all right there, you know,
Yeah.
and.
Yeah,
I'm
we're
here,
both trying to
it's
get
my
the same
phone, I
goal.
always have it, I'm looking at it, you know what I mean, and, call me, or text me, whatever you wanna do, you know, I'll get that right to you, you know, really, you know.
Yeah. I don't think I put as much, I don't think I put enough emphasis, quite frankly, on like the
Right.
minor stage, because I feel like I just was
We get
being
like-
so inexperienced.
They're
that-
that's why we're here.
And really, finally got, they had,
Yeah.
they had a really good thing, Miss Lending, she's out of Chicago.
Yeah.
Colin Barrett, she's like, sharp, with her combination, she was like, real- and she got them to understand them, had like,
It's so funny when like, when the people above operations finally find out, like I started with like training from like 20, right in Newtown.
Yeah.
That's
So
right.
there's a
Yeah.
record office.
Yeah.
I'm gonna get my wife.
Yeah.
I was like 23-year-old kid.
Yeah.
And read this meeting, and one of my dad, it was a underwriter called Crystal, and they say you got crystallized, because you jacked up your lung.
Yeah.
And there was one leg, the head, she was like, wait, like what? What did you just say? I was looking at his term, he called it crystallized, when crystal gets one of your files.
Yeah, I know,
She's
especially
like,
like the last couple of years. when
Yeah,
she's-
it's funny though, how
Right
like
from
you
the
think they
first
know, but in the
She was
creation
on
of
the
it,
unit,
the underneath
right?
feels like
So in the beginning, she's coming
they're
home
protecting
like
the brain, and they're protecting.
suits,
they're-
like space
Because
suits.
they don't wanna, I wanna get,
Yeah.
because they get that healthy here also.
Like, I couldn't imagine working.
If you
that.
don't
Yeah,
have
yeah,
this,
It
yeah.
was
this,
your
this,
oversight
this.
that,
Yeah, so it's a challenge for the underwriters as a console,
yeah.
I think, to be like, no, I get it, this makes sense. I get it.
My sister-in-law,
Yeah.
same
You know
thing,
the
she
guidelines, you know
graduated when
everything
she got her
else, you
first
know what I
job,
mean?
that's the first thing she's
And
doing,
if
is
you're
watching all
not-
these people dying. My wife's like, it's just, you know, she's like, it's gonna, she's like, I'm afraid it's gonna sour her. And I
And
really
it's
hope
like,
it
I
doesn't,
can't
but
do this, I need this, I need this, I need this. For discovery, you know, you're just like, you have to.
We have,
Due diligence.
we have a savings from.
Yeah, likewise. Thank you. Appreciate it.
And our other contract is January. And the city is just happening, so people are loving it, you
Yeah.
know?
Yeah. And then, you know, you're probably. They always try to steal you.
That's the place right across the street, I never tried that before, they're pretty
So-
good.
They have a specialty license.
Yeah.
Being right here, I mean,
I'm always over there.
Let's sit
I
down.
literally eat there almost every day.
Yeah, I'm gonna try that.
I wish I can't remember, because I've told so many people.
I'm always on the look for the good pizza places.
Yeah, really good.
Um,
They're really big.
self-employed tax return, and it puts all the data into something. You mean?
Oh, and so they have no idea what they're doing. So they don't know how to read it, they just know how to upload it and have the
But
answer.
like, I'm like, yeah.
Loan Beam is one of them. Loan Beam is one that's used, and we'll use it, but you have to also analyze.
Yeah, yeah. Because
Like,
you
you want it, yeah, you have to use it.
Then what- it's your thing. It's your- it's your
Underwriters,
business.
kind of interesting, like this process is something for underwriters to use that, so.
Yeah, yeah. I know, that's why.
And that's where the whole.
That's
I
fine.
know,
that was
I
the
still
details. They'll
have
look
the
at it and be like,
paper.
"Alright."
I learned that Freedom Mortgage, I wrote, that's my first.
Oh, yeah.
Except for the
Thank you,
3-hour,
guys.
500 questions.
Thanks, Sergeant Man.
Take care,
Stay
it's
safe.
nice to meet you. You know, the 3-hour, 500 question test, you know, got an 86, you know.
Yeah.
And,
Is email or the best way to reach
Yeah, I
out?
check my email every day,
Okay.
multiple times a day, so, yeah.
Like I said, next week.
Lynn.
That's fine, I mean,
Lynn
I'm
back, no,
I'm
Lynn,
swamped the next
whatever
few
it
days
is,
anyway,
she's
so
like that.
just
No,
get some
wrote
time to
everything
talk to
down.
her.
Wrote them verbal down. You know, like people like can type right into that. I still want to write it down. I was like, I swear to God, it's one try. What?
I doubt anything's gonna like drastically
I'm
change.
so apt right now.
Yeah, we still look every day.
Yeah,
so, you know.
yeah.
Yeah,
That's
back
all
it
these
up. What do you
papers.
actually-
Yeah, no, I mean, I have it obviously on the computer.
It took me a long time. There's actually a board, if you love to write, because I had to like break the habit.
Yeah.
Where, and it's been years now, but I would always open up, now it's a different system, use Trello, I know that. Where I type notes for everything, so I have to have notes.
Yeah,
So I type my notes there, and this way it saves on the server, not on my computer,
Yeah.
and it's there. But there's, I used to work with a guy who had it was like a digital pad, but it wrote like paper.
Yeah.
And he would write, and then he would like scan to his
yeah.
thing. So basically it was just one
Yeah.
pad that you would write on, and
Yeah.
then scan
I'm just
to
curious
his
to know,
thing.
like, the way
I
that
know, like, And I do always have a scratch piece every day.
Yeah,
Still have my
Like,
scratch
a
piece.
lot of it goes on the government, like,
As you're thinking, right, and then you're,
Like,
that way.
but they're private.
Yeah.
At the end of the day,
Actually,
they're private
really
companies,
good,
they
really
adjust them,
good
right?
stuff.
Like, or
Like,
they're-
it's
like,
not
you
my
can get a
favorite
completely
format,
different rate.
actually, but, and I thought, so I was with Movement
I want
once,
to say yes now.
and I
think
did
I
all
did
these,
the process, that's why I was wondering.
That's more of an.
Yeah, I'll ask
for you.
Yeah.
For a class.
No, yeah.
For real. So I would go to these real estate offices, and I would go to the Bucks
Yeah.
Association of Realtors, and I teach them how to get in.
No, of course,
the
yeah.
market.
Yeah.
Of
Oh,
course,
yeah,
it's still
it's
like
completely different. Oh,
We took it
There's a
some,
lot- there's a
and
lot
they'd
of
be like,
overlap. That's why
the
it's
guy in
such a
front row
collaborative.
knows
For
everything.
sure, yes, it's a lot of different.
Because they just like chime in,
Like,
like,
like you
my
deal
goal,
with-
if I can get you,
Like you interact with them and the home
Right.
inspector,
Three
all
ideas.
that. but you-
all I want
Yeah,
to do is
different
three
goals.
ideas. And you go through this, and even they at the end be like, you know what I mean? Like, all right.
Yeah.
So I like, this is the part, I like to speak.
Yeah,
And things
yeah.
like that. And that's what I do, so we're a team, so there's, you know, I do all the.
They probably think a lot after the last couple of years. There's a
And
shortage of
actually
them
have-
now.
I oversee the rules, but we do have some other people who get us. You know what I
Yeah,
mean?
yeah,
They
yeah.
know what they're running, right? And they're sharp too,
Yeah.
you know, they
Yeah.
analyze all.
But you can't even get it, you can't get to you unless you got the right numbers, you know, the right information in there.
Everything. And I get like.
A lot of people, all my friends, are like, I have a few friends. who are real estate,
They
they'll
send
do it,
someone
do
some
it.
sentence, you know what I mean? Like they're around, I'll get around them.
No,
They
I've had
help
underwriters
a
that
lot
were
of
like,
young
it
people,
says those things,
whatever,
so
so-
like, oh, God, I'm on that. Great job, good job, thanks, so nice to meet you,
Thanks.
thank you
You
so
too.
much.
Thank
Sorry
you.
about that, I didn't mean to
Nah.
step on yours. I apologize for that.
Thank you.
Yeah. you were thinking-
One quick question for you, Angela.
Yeah.
Thank you so much.
So
That was
when,
awesome. You did a
because I'm not
great
real
job.
super familiar with how like the mortgage rate,
No, you-
like the mortgage
you
works
did
when you
that.
get approved and all that, so like,
You did
I
really
could have
well.
sworn, like I went out to a couple, like I told you, to get a general idea of what I
Yeah.
get approved for. I don't know, like, so are they like private companies with different rates? I know that the Fed like sets the ultimate rate, so I
So-
swear I got two different rates, way different from two companies.
Mortgage-backed securities are the market where mortgages, so that's where they're bundled and sold on
Yeah, so
the street.
Yeah.
So that's the determining factor of this. Now, what companies adjust are their margins.
Gotcha.
All right.
So what you'll have
Yeah.
is,
Well,
and most
see
of
you
the time,
then.
you make.
Yeah.
So I still go
All
out
right,
and
take
fish.
care.
What's that?
So I still go out and fish multiple offers,
Yeah.
basically.
You could, yeah, now here's the problem,
Yeah.
like, the cheapest, like, you do get what you pay for, even with
Yeah.
mortgages. So
Yeah.
the bank with the cheapest rate is focused on cheap rate. They're not paying that person any money, they don't give a fuck if they advise people,
Yeah.
or they thought, all they want you to do is say yes, and usually, it's like young kids who don't even own a house. That's fine. And they're sitting, and they're just sitting at a desk convincing people to say yes, and it's the
I don't
most
know how to turn
dangerous
it
thing
off.
in the world, because then what happens is, you put everything at risk. The goal isn't to get a cheap mortgage,
Right,
the goal is to get the right house,
right.
and you fuck up on the mortgage, and then you don't get the house, and you lose money, because you
don't
have
know
to
how
pay
to
for things in advance before you
recording.
find out that things go south.
Yeah.
And for that
That's
risk,
it, I didn't know any
it
of that.
is not, the reward is not great